Let us start basic candlestick series from this video. Hi viewers, welcome to the world of Get Trading. Before going into candlesticks and candlestick charts, let us discuss about charts first. What are the various chart types that are used in trading? Charts are the basic tools for technical analysts. Charts mean a graphical representation of data. It is very important for the stock market participants to have a maximum knowledge regarding these charts. Let's first see the types of charts used in stock market: line chart, bar chart, and candlestick chart. Let us first have a look on a line chart. Line chart is the basic type of chart and also known as traditional chart. If there is a continuous change in the price of the product, then we can graph it on the chart to make it more easier to understand. For example, let's assume on the first day price of the product is 10 rupees. On the second day the price is 20 rupees. On the third day it is 50. On the fourth day the price is 30 rupees. On the fifth day it is 40. Now, when we connect all these points, the graphical representation obtained is said to be the line chart. With this basic knowledge, let's have a look on the actual chart. This is one of the yearly chart of TCS. From the year 2005 to the present year, we could see the daily closing price. The x-axis represents the time which is shown in days and the y-axis represents the price in rupees. We can see in this chart the opening, closing, high or low of the price of that day. But remember, we can see only one data at a time. Usually, the investors choose closing price to check the charts. Without any complications, this is the easiest way to understand the chart, as long-term investors don't really look about high or low of that day. Now the next type, bar chart. Disadvantage of a line chart, as said, is only one information can be obtained at a time. Say here we are getting closing price, but a trader needs to see open, of course, close, high and low of that day too. These all things can be seen in the bar charts. Let us see with an example. In this year, the opening price is 50, the closing price is 80. In this year, the lowest price was 20 and the highest price was 100. We could see all of this information in the bar charts very easily. So, let's mark the high, low, open and close. From the high to low, there will be a vertical line which is known as range. This range is the maximum price the product has moved. If we draw a line here to the left side, it is said to be mark or tick. It indicates the opening price of that time. If we draw a line on the right side, it is said to be mark or tick. It represents the close price of that time. Simple. This bar can also be called as OHLC bar, which means open, high, low and close bar. Let us see this information on a chart itself. Let's zoom in. This central line, left tick and right tick position had shown how the market moved on that particular day. If this time frame is of 1 hour, it shows all this data of that particular 1 hour. Another thing, if right tick is on top than the left tick, it means that closing price is more than the opening price, which means that the script has been closed in positive note in that time period. This in stock market terms is called bullish bar. On the other hand, if the left tick is on top than the right tick, it means the closing is less than the opening price. It means that the script has been closed in negative. This is called bearish. Usually, the bullish bars are indicated in blue or green color and bearish bars are indicated in red. Now let us move a step further and see about our main topic, that is candlestick charts. This candlestick was introduced by Munehisa Homa, a Japanese rice merchant in the early 18th century. As it was introduced in Japan, this is also known as Japanese candlestick. This information in the bar charts is indicated by central lines and ticks. In candlestick chart, it is shown by a rectangular body and shadows. Let us see in the previous example itself. Let's remove bar and replace with candlesticks. From open to close, there will be a rectangle shape and this is called body. From high point to upper body, there will be a line which is called a wick or a shadow. As it is above the body, it is called upper wick or upper shadow. Another line which connects the lower body to the low is called lower wick or lower shadow. In this way, the candle shows the complete information of that time and that too in a very easily understood manner. Now let's have a look on how a bullish candle and a bearish candle can be identified and distinguished. Of course, both looks identical. The only change is the open and close positions. In bullish candle, the upper part is high and the lower one is low. The lower part of the body is open and the upper part of the body is closed. Another way of seeing, if close is higher than open, it is bullish candle. In the same way, in a bearish candle, the upper one is high and the lower one is low. Same with both types. But the difference is, in bearish candle, lower part of the body is closed and the upper part of the body is open. In another way, if the close is lower than the open, it is bearish candle. Usually, the bullish candles are identified by white, blue and mostly green color, and the bearish candles are identified by black or mostly red. Let's see the same previous script in the candlestick charts. If we zoom in, each candle shows the particular day trading. As this is green, this is a bullish candle. The lower part of the body is open and the upper part of the body is closed. In the same way, as this candle is in red color, this is a bearish candle. Its open is the upper part of the body and its close is the lower part of the body. As we can see here, candlesticks can be in several shapes and sizes. One may have a bigger body or one may have a smaller body but bigger wicks. These all types give different information on the price behavior on that time frame. These can be also called as patterns and that will be our next video. Let us see about each single candlestick pattern one by one. You can get to know the market psychology after watching all of our videos. This candlestick pattern helps in identifying the trends, observing the body and wick's length in the script. We can understand the physiological forces too. So, let us continue this series with a single candlestick pattern, Marubozu, in the next video. If you like this video, please hit on like. Please share our video with your known ones. If you are looking for a good stockbroking company, we suggest you to trade with Fyers. To open your free demat and trading account, please click on the link in the description box and submit your details in the page opened. Have a safe, happy and profitable trading.